the Federal Reserve in the US continues to increase interest rates and the Bank of Canada doesn't follow suit in some way, shape, or form, well, that has repercussions for our dollar. And if the value of our dollar goes down, then buying power of foreign goods goes down. And it just creates this scenario where it's like, how much of a gap can Canada create to the US from an interest rate perspective before the US starts to look like an extremely more attractive place to put your money?
Welcome to the Tom Storey Show with Steve Karrasch and Tom Storey, where we discuss everything real estate or whatever else is on our minds.
We're definitely going to do the weight loss challenge. It is going to be a thing for sure.
Nice.
All right, ready to go, Steven?
Let's do it.
Welcome back, everybody, to another episode of the Tom Storey Show. And Happy New Year. If you're listening to this, it is January the 1st, 2023. I feel like 2023 has been coming for a long time. It is finally here. Happy New Year to all the listeners. Thank you so much so far. I think, we were talking about it on the last episode with me and Steve, that I think this will be episode maybe 32. So we're still in our infancy of this podcast, but to see it growing every single week has been really, really cool for us. And thank you for everyone that subscribed to the YouTube channel. If you're listening on audio, leaving that rating on Apple Podcasts makes a huge difference. I am thrilled to introduce our first guest of 2023, who is our first actual repeat guest, even though technically you were already back again. So I don't know if this is 2 or 3. It was a bonus episode. But the man himself, Nolan Matthias, is with us. Nolan, what's going on?
Oh, thanks for having me again. Yeah, this is two podcasts, and then we did that fun live where we got to see the comments live and see what people were saying live. That was fun.
That was
Congrats
fun.
on all the success with the channel here, man. Like, kind of wish I'd jumped into this with you guys early on because it's gone very, very well, hasn't it?
Well, we will have you back literally whenever you want. What I
Right
didn't
now,
tell
you're
you,
on 10% of the episodes.
what I didn't tell
keep
Nolan
doing
is that he's the first return guest because he actually said yes. All of our other guests just stop answering us. Right? That's the issue.
Well, that's because I love you guys. You're two of my favorite people in this space.
So Nolan, what's going on? We got a new year here. We're figuring out our resolutions. Do you have any personal resolutions for 2023? Anything you're working on?
No, you know what? I'm not a resolution guy. I'm kind of always adjusting to begin with. So when it comes to New Year's, I'm not even thinking about it because I've already been thinking about it for the last 6 to 8 months. But I mean, I think what you'll probably notice if you've been watching my channel is a little bit more shift, not away from the Canadian mortgage space, but to more general topics, more general finance topics, trying to really move in that direction of being a channel about thriving financially, not just about in real estate, because I think that's where all the people that we've placed in houses and placed in mortgages over the last couple of years, now they're getting to the point where it's like, okay, I've got the house. Now what do I do? So we're kind of trying to grow that channel in that direction and really make it something that is more well-rounded. And I think if there's one thing I'm focusing on, that's it for 2023.
Out of curiosity, how far in advance do you have your video ideas lined up moving into this year? Like for the new way you're going about it, do you have like the next month laid out?
Yeah, I mean, that's getting more strategic. It used to be I used to wake up, watch the news, and then I'd make a video on whatever the news topic of the day was. And if you've noticed lately, there's been none of that. Now I'm actually planned almost out to the end of January, and for the first time ever, I'm actually recorded out to probably about January 8th right now. Already done in advance, with the exception of like the interest rate update videos and the Canadian real estate update videos have to be done kind of in a timely manner. But there's a lot of content that's kind of built out already, which is new for me and is nice because it's going to give us some ability to go on vacations and do some things that we hadn't really done before.
Right. Now we can actually do it, right? Steve, I know you had talked about the weight loss challenge. Is that still happening? How's it going? Do you have people that are doing it with you? What's that looking like?
We got a taker.
We did.
Probably within a few hours of last week's episode being released, I got a phone call on my cell, first of all.
Oh, really?
I'm a little scared because I don't give out my cell phone number, and this individual called me directly. So I'm already up against somebody who's resourceful, let's call it. And yeah, so it's another local ish, Vancouver-ish, Burnaby-ish real estate agent. His name is Keith Wintermans. Keith Wintermans. And he is like, let's do this. So we're ironing out the details. He's older than I am, and he is larger than I am.
Okay.
So he wants odds. So I'm going to give that to him. But
no, you can't give the heavier guy odds. You can't do that. He's going to destroy you.
He's 50. First of all, I want him to destroy me. If he destroys me, that's great, and we're gonna kick ass because us fat old dudes got to figure this out, right? Tom can't just beat us all up all the time. Like, we got to show that we can still do it. But we're gonna take it. So we've set our own goals. We're gonna do like he's got to do, I think, $10 a pound for me, and it's not a bet against each other. It's who can make the other person pay more, if that makes sense. So, and then all funds obviously going to go on my side. They're going to go to the Surrey Food Bank. I don't know if he's picked a charity yet or if he wants to pick the Surrey Food Bank as well. But then there's an overall goal. So it's going to be an 11-month challenge.
Oh, wow.
There's going to be monthly minimums to meet. It's going to get intense, and it could be upwards of if we don't do what we say we're going to do, it's going to be probably like $1,000. And if we do everything we say we're going to do, it could be with penalties. If we have cutting and different stuff like that, it could be a $2,000, $3,000, $4,000 each. So we're putting real money on the line, and it's going to be a lot of fun. So I got to try and get 40 pounds off my fat ass.
So that's the goal, 40 pounds in 11 months?
Mine is 40.
Okay.
Mine is 40. His is 80.
Wow. Amazing.
And I told him, I'm like, yes, as long as you're okay with me calling you a loser on the podcast, because you're going to lose, Keith, if you're listening. And he's like, yeah, let's do it. He's similar, like he's a little older fellow than me, but he, has young kids and wants to take his health more seriously and has sacrificed a lot to do real estate. And we end up, unfortunately, in this business sometimes sitting more than we like and in front of computers and things like that. So he called me up and he's like, this is what I need. Let's do this. I think he's also been in the past like legitimate athlete at national levels or maybe international levels. And I believe he's also been a professional gambler. So this might go bad for me, but we'll see how it goes.
Well, I'm rooting for both of you. And what happens if you don't meet your goal? We're replacing you with Chat GPT as my secondary podcast host. Is that what's happening?
I'll do it. I'm in.
Nolan's in. Yeah. Have you played around with that new AI tool?
I did. I used it once for. It's cool. Hey, like it just gives you like it writes the whole video for you.
I was thinking of doing I did a video where it gave answers, which was kind of fun for what was going to happen with predictions. But after I did that, I think I realized that it's only up to date to like 2021. So it's 2 years behind on the information that it's giving. So that video just kind of doesn't matter anymore. But
well,
for getting video
it's
ideas,
probably indexing off of whatever Google was ranking the highest as well, right? So
yeah,
whatever has the best SEO is what's at the top.
I'm kind of worried though that people that are just getting into content creation are going to use it and just read it word for word. And it's going to be all these people putting out content that's basically robotic, where I feel like most people should use it to get little ideas and then incorporate it into what they're going to say, right? Because it's good, but it's certainly not perfect. It's got a long way to go.
Well, I mean, I think that's better than them just getting your videos transcribed and then reading off your script and doing the exact same video you did, right?
I'm Chat GPT for others, apparently. So you had an issue too recently where some people were reaching out to other people growing YouTube channels, basically saying they did everything for your channel, which was a complete lie, just to get their business. That you had that happen recently?
Oh yeah, it was. I had a couple emails, and I was kind of like, I don't know if they're fishing, if they're trying to fish me for information by saying, hey, somebody's saying that they helped you and I'm checking a reference. So I kind of ignored the first couple. Mm-hmm. And then I had a guy from Windermere Real Estate that I kind of was able to confirm. I've done some work with Ninja Selling, and Windermere is a big client of theirs. And I was kind of like, okay, well, maybe I'll just call this guy. So I called him, and yeah, he sent me the screenshots and everything. Sure enough, there was somebody overseas who was saying that they were responsible for my channel to getting where it was. And and they had screenshots, and it legitimately looked like it was my channel screenshot. It looked like it was like they had taken them over a series of time, except for one thing. If you look down in the bottom right hand corner, showing like the top videos for the period, it had a whole bunch of yoga videos and a whole bunch of like stretching videos and Pilates videos. So clearly they'd taken it from a different channel and just photoshopped all my stuff in. But yeah, I mean, it seems like there's these guys that are going around to all these realtors in the States, it seems like, and they're saying, yeah, we built Nolan's channel, and if you want us to do the same, just pay us X amount of dollars. In fact, another guy from Windermere Realty had actually paid the guy to start doing work on his channel because of the fact that he had these screenshots from mine. And so I saved one guy from doing it, and then the other guy went ahead and canceled it.
Crazy. Because we finally gave in to one person that was hitting us up to do shorts for the podcast. Yeah. Because he does a really good job. Like, we've been putting them out recently. The quality is just way higher than what we were doing. Are you building shorts into your content plan for next year? Are you going longer on or harder on the long form?
No, shorts is in there. It has to be now. We'll probably end up doing one short a day for all of January, but instead of it being like for the podcast, I think with you guys clipping it, I think that's amazing. For my channel, they're going to be purpose-built clips.
I see.
And not clips, sorry, they're going to be purpose-built shorts. So they're going to be recorded on their own independently, and then they'll be put out to TikTok and Instagram as well.
That's cool. Yeah, I think that's kind of like where it's going here. Like, if you got to play the game, and if YouTube's saying that they're focusing on this aspect of it, I think all three of us need to be like, okay, fine. Like, we'll start doing this, right?
Maybe we should be clear on something here, though. Like, and maybe I can make this as clear as possible. I know, Tom, you've had a lot of trouble with this with fake accounts and things.
It's happening again right now, by the way. Again.
Yeah, it does. And for sure, like, yeah, we get roasted in the comments of people that don't understand or don't appreciate it, aren't in our industry, don't like the fact that we, sell courses or whatever, right? I will never reach out to you for anything, any business opportunity outside of buying or selling a house. If you want to buy or sell a house, it's my job to reach out to you. Right. And that's what I do all day long. So please don't buy anything from it. Now, if you come to us and say, hey, I'm interested in your course, for sure, we'll do that. But we're not actively going out there and DMing people about courses or editing or whatever. Like, just don't go there. And that was trouble for us for the longest time. We were trying to find people to bring in to like help with the editing and different stuff like that. And it was just tough. And so now we've found someone we're happy with at the moment. And we're going to keep going on that. But it's just like, these people are relentless. They're relentless. I wake up to 5 emails a day, obviously from different countries.
We're getting 5. Imagine how many Nolan is getting.
Yeah. It's crazy.
You pretty much just have to delete them. Like, I think some of them are probably legit and most of them aren't. And the legit ones are just getting deleted now because you have to get rid of them all.
Yeah.
By the way, on the fake accounts on Instagram, the thing that I found almost killed that completely was I put in my bio, the first line is, I will never DM you for anything on Instagram. And as soon as I put that in, I had one account copy the account and actually copy that line in the bio and then started DMing people, and they were like, But once that started, once I put that in there, pretty much all that stuff stopped. So knock on wood, hopefully it keeps stopping. But yeah, I'm not going to sell them cryptocurrency or courses or anything else as well.
With the first time it happened to me, I did that and I changed my bio, my real account to "this is my only account." And then obviously the fake one did the same thing. And it's happening again. Like, I got an email about it this morning from someone being like, "Are you talking to me?" I'm like, "No, it's not me." Where they've got 2 R's in my name now. And the last time, the only way I got that account down is I literally had to take a picture of myself holding my ID and send it to Facebook. And then finally, like a month later, it was gone. But like, Steve, this was happening when we were in Whistler, and it was like non-stop. And I feel like a few people got scammed, but just didn't tell me. But Anyways, enough of that. Let's talk real estate. Let's talk mortgages.
This episode of the Tom Storey Show is brought to you by the Storey team at LePage Signature in Toronto, Ontario. The Storey team focuses on satisfying all of their clients' wants and needs when either buying or selling real estate in the GTA. But don't take my word for it. They have way over 100 5-star reviews on Google from clients singing their praises after amazing home purchases and sales. From downtown Toronto condos to semis to detached homes, whatever your needs, Tom and his team promise to provide an educated, honest, and transparent approach to helping all of their clients achieve their financial and personal goals through real estate. So there is no need to search bus benches or newspaper ads anymore to find the right agent for you. Just visit www.storeyteam.ca to book a call with the Storey team today. That's StoreyTeam.ca. That's storeyteam.ca. This communication is not intended to cause or induce breach of any existing agency agreement.
Let's get into the stuff that really matters.
Okay, here's my first burning question for Nolan. Have you had any clients, obviously leave out specifics, that have told you that they are worried about making their mortgage payment? Is that something that we're going to see this year?
We haven't had that yet. We've had a lot of clients who are waiting to get into the market who have asked, have you had any clients that haven't been able to make the mortgage payments yet? CMHC put out their default rates now. It's for like Q3 of 2022. But the default rates were actually the lowest that they've been in history. At least as far as I can tell, they're significantly lower than they were 2 or 3 years ago. Which I have to remember is like everybody's been qualified to pay the rates that they're paying at the moment.
Yeah.
And that could we find ourselves in a scenario where interest rates get higher and they aren't able to make those payments? Maybe. But even though it feels like it's more stressful, literally they have all been qualified at, let's call it 40% gross or total debt service ratio at 5 to 5.25. So even though they feel like it's more painful, that's the rates they've been qualified at. And traditionally, if you've got 40% of your income going to your debts, that's very manageable. So no, we haven't seen anybody yet who said, I can't make my payments. We've seen people in the YouTube comments go, I'm screwed, I'm financially ruined.
Yeah.
But yeah, anybody who got a mortgage legitimately seems to be doing okay at the moment.
Yeah, that's an important way to put it, right? Who got a mortgage legitimately seems to be okay.
Yeah.
Yeah. So, you know, I don't think we got to really talk to you about this, right? But like when that mortgage fraud came out from Marketplace, me and Steve did a chat about it. We talked about our thoughts about it, what we'd seen. But the reality is, like, we don't look at our clients' financials really. Like, they go directly to the mortgage broker. So I guess on your end, when that was all happening, were you getting more questions from people? Or like, how many times have you seen a mortgage application and just gone like, oh, that's totally fake, we're not helping this person?
Yeah, it became really prevalent probably mid 2021. And it's so easy for us to find it, right? Because some of them are a little more sophisticated, but if somebody shows up and they've got a credit bureau request at like 19 different places, like 4 banks, a bunch of different mortgage brokerages, and then they're coming to us, it's usually pretty easy to figure out that they've been told no elsewhere, and it's probably, if the deal seems to work, there's probably something fishy on it on the other end. But it was really interesting. Like, we saw some weird stuff. We saw a lawyer who was trying to do it, and his response to me when I said, you know, we can't do this deal for you, and he goes, well, why? And I'm like, we just can't do it, and we can't accuse them of fraud. Like, that's accusing somebody of fraud is defamation, unless you're going to go to the next step and take it to authorities and everything else. But we literally said to him, like, we can't do your deal, and he got really mad, threatened to sue me, he's like, this won't be the last time you hear from me. I mean, people are just in a panic to buy houses, and it wasn't just like people who made a little bit of money, it was people that made a lot of money, and it was pretty prevalent. But we were pretty good at finding it, especially considering that we're in Alberta, and a lot of times we're seeing people in BC and Ontario who were applying for really big mortgages, and just the signs were really there and really obvious when they were coming to an Alberta mortgage broker to get an Ontario or BC mortgage, and they had all those credit bureau pulls. So I'm sure some got through. I hope none got through with us, but yeah, there's actually, and we found some really good, not really good, some really well prepared fraudulent documents too, up to including like websites that have been created and phone numbers that have been created. This is a good one. We had one in Ontario where they created a fake business, fake website, fake job letter, and then the job reference, the phone number on it looped back to the realtor. So when we Googled the phone number, it was like realtor, and then this fake employer, fake business.
Crazy. That's crazy.
Yeah.
Well, I
and
mean,
that's not to say that realtors were in on it. That's to say that there was one bad realtor. Have to make that clear for YouTube, right? It's like there was one bad realtor that was doing this, not realtors in general. It was one guy, but it was interesting that was how that the realtor and mortgage people were obviously all involved in it.
Yeah. Well, I mean, even in the CBC report, right? It all came back to one specific brokerage where it was happening with a bunch of people in that brokerage that were probably taught by one person what to do. And right, there's going to be bad apples in every industry, but it's obviously something we have to acknowledge. And I hope that coming out and us talking about it is going to stop it in the future, right? Like, I think to say it's going to stop totally would be foolish, but hopefully like way down where it doesn't have an impact on the market, because those people, when rates are going up and things are changing, if they couldn't afford the house in the first place, they lied to get it. Well, what do you think the situation they're in now? Like, they're going to be the first ones, not being able to make their payments. I want to talk about quickly this R word, this recession that we've been hearing about, right? I'm not sure. I'm not as much on the financial side of things as you are, Nolan, like reading everything that's happening. I don't think technically we're in a recession yet, but we're expecting one this year, at least in the first 2-3 quarters of 2023. I got to tell you, I went to the mall during Christmas and it was packed. I felt like a sardine in there. I went out for dinner at the Keg and it was packed. I got into family events. No one bought less gifts for each other. So are we all just idiots? Is the economy just not catching up? Steve wants to say something.
I want to say something so bad. I tried to go out for dinner last night. We got a babysitter real quick. We ran out, did some shopping. We went to the Cactus Club at 4:40 p.m. to try and hit happy hour.
The early bird special.
I'm getting old, man. So we go in there, and at 4:40 we asked for a table for two, my wife and I. Sorry, the next available table is 8 p.m.
Crazy.
Like, that's where our economy is right now. So how can it be that bad?
Yeah, we had similar thing last night. We went to Sky 360, which is the restaurant in the Calgary Tower, which, by the way, spins and made me freaking nauseous. But we went up there and we got it. We had an 8:30 reservation. We showed up at 8. They're like, nope. So we went across the street to grab drinks to a bar that I go to frequently. We had 6 people. And here's where I think there might be a little bit of indication of some sort of cracks in the system. We had 6 people. We ordered 5 drinks, all in one tab. I was taking care of it. And the bartender like put the tip in manually for 20%. And I was like, 6 people, 6 drinks, 5 drinks. Well, why are we manually putting in a tip? By the way, I always tip them 25%. So when it kind of surprised me. But yeah, I feel like people are walking in there. It's in a hotel and people are walking in there and maybe not tipping as much anymore, and cutting back on that. So, I think recession, the technical definition of a recession is 2 quarters of negative growth on GDP. So in other words, and it can be 0.01%. We're pretty flat. So do you need to be technically in a recession to be in what feels like a recession or what is pretty close to a recession? No. I think some of the Christmas spending numbers are down a little bit, which is kind of an indicator that people are getting a little smarter with their money. But if we're going into a recession, for the most part, people are acting like it's 2022 and 2021, and they're not acting in any way, shape, or form like it is a recession. That's for sure.
That's what I was trying to say. I just from what I'm seeing, what I'm hearing is totally different. And from the conversations we're having on this podcast with people and just with my friend group in real life. And it's very interesting where people are tightening up on a lot of things, but I guess it really is okay. So who is feeling what the Bank of Canada is doing right now? Like, who's immediately feeling it? People that took adjustable variable rate mortgages, or people that have hit their trigger rate on their fixed variable, right? That's who's feeling it. If you're 1 year into a 5-year fix, you're not even thinking about 4 years from now, like the average consumer. So is the portion of the population that should be feeling it smaller than we think? Is that why the malls are packed and it's hard to get a seat at a restaurant?
Yeah, I think the unfortunate thing is anytime you increase interest rates and you find yourself in an economic situation like we're in, is the wealth gap definitely widens initially, and the people who feel it first are low income earners, and not just low income earners, but the low income earners that are relying on those incomes to make mortgage payments or make rent payments. And I think that's probably why you're not seeing the effects of the rates right now, is because the people who are able to go out and spend in the malls and spend in the restaurants are still doing it. They definitely haven't felt very much of it yet. And the people who are really feeling it are probably not out. They're probably staying at home, and they're probably not at the point where they're not going to be able to make payments yet, but their lifestyles changed pretty drastically.
Well, even just from seeing all the stuff on Facebook recently of the millions of flights that have been canceled, like, well, people were trying to fly places, they were trying to go places, they were trying to spend their money, and you know, we've been warned here by our governing body of who lends money and sets the rates that, hey guys, tighten things up. And I don't know, I just personally haven't seen it yet where it's clear to me that people are actually tightening up, and maybe that should be worrying moving forward. I'm not sure.
Yeah.
But
Yeah, well, and unfortunately, people won't make the decision to tighten up until it really starts to hurt, right?
yeah, I guess again, we've talked about this with you a ton of times, right? It's like what you don't see coming. And it could just be like that 1 month where everyone's like, oh shit, okay, can't do all these other things anymore. All right.
But all the people too want to pretend that everybody bought their house in February 2022
Right.
on a variable rate mortgage, right? And that's such a small amount of the population. Like, we were out there, doing some shopping, not a ton, but a little. And I was looking around going, I don't know, the majority of these people probably didn't buy a house last year, right? Like, the majority of people that were in the stores we were in, maybe it was the stores we were in, but Tom's going to make a joke of my age here, but they were, older ladies. A lot of the time, they are probably established and likely didn't buy a property last year that immediately went down 20% in value on a variable rate mortgage, right? The majority of people, I think, are doing fine and probably haven't noticed. Sure, they noticed the gas in Vancouver here went up to $2.39 a liter, right?
Is that what you're at right now?
No, we're back down to like 170.
We're at like 140.
We went from $2.39 a liter to $1.49 a liter within 6 weeks. Like, it just dipped again. I don't know what the heck.
What's Calgary like?
$1.04 yesterday.
$1.04?
Yeah.
Are you guys always way lower? Did I just not know that?
Yeah.
Because you guys
less
have
transportation.
It's just there. Yeah.
Oil's here, refineries are here, less transportation costs.
Yeah.
It's always lower than the rest of the country, but I mean, we were up to $1.70 or $1.80 at one point. But that's a really good sign that interest rates are doing what they're supposed to be doing, and that the growth is flattening out. Because when those gas prices start to go down like that, it's partially supplies coming back online from a few things that happened in the downline of the oil industry, but it's also partially like that's one of the places where people do start to stop spending really fast is on driving places. And it's one of the most that's one of the first things I watch when I'm watching inflation numbers, is I actually watch what the gas prices are doing around the corner, because that's usually an indicator of what's to come, and it's a really good sign that it's going down across the country.
I want to ask you a specific question about people moving to Alberta, specifically, Calgary and Edmonton, that are moving from BC or Ontario. So there's all these stories about this interprovincial migration, all these people moving, and now we're starting to finally see the stories of people like sitting there in minus 35 freezing, being like, I didn't know this is what it was like. So have you heard any of that from people? Like, maybe it's more like once in a while sensational news stories, but a few people are like, I ruined my life. I moved to Edmonton. I thought it'd be great. I'm moving back. I lost all this money. I shouldn't have done this. Like, we saw this playing out a little bit when everyone was just moving, not thinking. Not to say those places aren't great, but it's all relative. So any thoughts on that?
I mean, if you want to ruin your life real fast, move to Edmonton and put a orange and blue jersey on, and you'll feel like less of a human being for sure. That's an Oilers reference, but no, Edmonton's a beautiful city. Calgary's a beautiful city, but you get those minus 40 days, and it's pretty cold. But that being said, I'd rather be at minus 40 in the prairies where it's dry than be at like 4 degrees in Toronto or Montreal where it's wet and just you feel that to the bone. I haven't heard anybody really saying, oh, I ruined my life by moving to the prairies and it's colder than I thought. Yeah, I mean, I think that's something that comes along with the territory, but like it's also sunnier and everything else. I think the interprovincial migration numbers are interesting because we're kind of seeing that prop up the Calgary and Edmonton market a little bit.
I would assume so.
And I don't know if it's actually propping it up or if it's just like the psychology of it where people think that it's happening. So it's creating this sense of a busier market than what there actually is. But yeah, it's definitely having a positive impact on the real estate values in both those cities.
Because like Alberta was literally running ads on the TTC in Toronto.
Yeah.
Basically saying
really?
like, move here, it's great. I forget what the wording they use, but they were running ads on our transit system to move to Alberta.
Well, it is great. And I mean, I think that's one of the things that comes along with big differences in real estate prices, right? Is you start to see that the rebalancing of the portfolio, so to speak, which is the rebalancing of where people go to live. And that's to be expected when, when Calgary's, arguably the third or fourth biggest city and definitely ranks higher by the economists with respect to livability. You got to expect that people are going to make that move if they have nothing tying them to those more expensive cities.
Well, here is my thought. If you can work virtually, the difference between selling your house in Toronto, moving to Calgary, buying a house for half the cost there, you could literally rent an Airbnb in Mexico for the other 4 months where it's really cold and just work there, and it would still be cheaper than owning your one property in Toronto. Like, I don't know. That's where my mind went. Like, let's get creative here, guys. Let's talk about our favorite subject, which we all know 100% exactly what's going to happen is mortgage rates moving forward. So let's start on variable. Let's talk Bank of Canada. I think, well, I'm going to let you answer this. I don't want to put my opinion out there yet, but moving first quarter of 2023, are we going to see another hike here?
Yes, I mean, I think first and foremost, we have to talk about this from a perspective, not prediction standpoint, because these types of conversations nobody can predict. Economists, it's an economist's job to put information out there and then have something else happen that proves their predictions wrong, and then go back in hindsight and say, well, here's why that didn't work. But I think there's some interesting dynamics playing out right now. First and foremost, the Bank of Canada changed their language in December. They made it very clear that everything going forward is going to be database decisions. Now, they made a whole bunch of stuff clear in the last couple of years that wasn't really clear, like interest rates would, remain low for a very, very, very long time. But their language is more centered now towards they're going to make data-driven decisions, which means that they're going to watch the actual numbers, and based on what happens with the numbers. So if inflation's rising, you're going to see higher interest rates. If inflation's going down and going down very quickly, they're probably not going to make changes. So they've shifted their mentality. Now, there's the other big dynamic, though, is what's happening in the States, and the States has taken a completely different position on it. And the Fed in the US has said, we are going to continue to increase interest rates. And that becomes interesting for our country because there's going to be some pressure. And Canada, you can argue, is more interest rate sensitive than the US is, primarily because of the amount of people who have variable rate mortgages. That's something that very much doesn't exist in the US, right? So like there's a whole bunch of people with variable rate mortgages and variable rate mortgages with adjustable payments that feel the pain immediately every time the Bank of Canada increases interest rates, not to mention businesses that run lines of credit, right? In the US, you have lots of businesses that run lines of credit, so they feel the pain of higher interest rates right away, which means potential job issues. But their interest rate sensitivity, in theory at least, isn't anywhere close to as sensitive as ours. Now, if the Federal Reserve in the US continues to increase interest rates and the Bank of Canada doesn't follow suit in some way, shape, or form, well, that has repercussions for our dollar. And if the value of our dollar goes down, then the price of our goods go down, and our buying power of foreign goods goes down, and it just creates this scenario where it's like how much of a gap can Canada create to the US from an interest rate perspective before the US starts to look like an extremely more attractive place to put your money. So there's some really interesting dynamics that, you know, if the US starts increasing interest rates, could have a really negative effect on the Canadian economy. And this is why it's like you take all these things, and it's why you can't make a prediction. You have to talk about perspective. It's like, which thing do you think is going to have the biggest impact? And I have this feeling that we're not going to see a rate reduction in 2023. Although now that I've said it, it'll probably happen. So
I said I thought there'd be a cut in Q3, but it would be a 25-point cut. I had to make one bold prediction, Steve. They couldn't all just be vanilla, like obvious. I had to say one thing. Well, we'll find out, won't we?
I think a lot of people are really hoping that we're going to go back down to like 3.5.
Yeah, that's not how it's going to happen this year.
And I don't see that happening again for quite some time unless they are successful in completely making everything go to shit.
Yeah,
I don't think we're going to be there. I think there's where were we last time we spoke, or last time we had you on, Nolan? I think we were at like 4.5% 5-year fixed. Right.
yeah.
And maybe
We're
even a
almost back down
5%
there.
5-year fixed. And now we're almost back down there. So we've seen almost no movement in, let's call it, 4 months, or we've even come back down on the fixed side. I put a survey out on my channel just recently, and it's only got 80 votes on it. But I said, what would you take if you had to renew your mortgage today? What would you feel comfortable taking? And obviously it was, 5-year variable, 5-year fixed, 1 or 2 year, or a 3 or 4 year. Right now, I can't believe that 28% of the people are saying, I'm still going variable. I think you guys are insane right now. Personally, I think you're always insane, because I would never take on uncertainty myself. 13% of the people saying 5-year fix. Where I would be personally is a 3 to 4 year. I probably take a 3-year when I renew this year, is what I'm looking at anyway. But that might be for personal reasons as well, only 9%. But 51% of the people are Tom saying, I'm going to gamble on a 1 to 2 year and see where rates are fixed. See where rates are in a year from now. And really, I don't think they're going to be a whole lot different. If anything, I could see them being higher. I don't see them being, thank goodness I did that, because now I can lock in at a 3.29. Right.
Yeah. But what Tom's doing with a 1 or 2 year mortgage is essentially a variable rate strategy or a floating rate strategy, because he's just creating some certainty around when the rate changes will happen in 1 or 2 years. And I don't think a 1 or 2 year mortgage is a bad idea if you can get it at a similar rate to what a variable rate's at right now, because I do think we're probably going to see some more interest rate increases. So if they're both priced at whatever it is, 5.25, well, you've probably got some certainty built in if you're taking a 1 or 2 year fix, and I think it's a good strategy. I think regardless, what people need to understand is that picking a variable rate isn't about or a fixed rate isn't about trying to time the market and trying to time when you get the right rate. It's about the overall strategy. And there's 2 advantages to a variable rate when it comes to that overall strategy. Is one, that over the long term, the variable rate mortgages will tend to balance themselves out and end up being more financially beneficial in the long run. And then the other thing, and this is the big variability of a fixed rate mortgage, is you don't know what your penalty is going to look like if you take a fixed rate mortgage. So the variable rate choice is about minimizing that cash outlay when you want to make a change. And I think, Tom as a realtor probably has more opportunity to buy and sell property and is more likely to move. So he's probably making that decision as a smart real estate agent and choosing that mortgage because he knows that he doesn't want to expose himself to that penalty just because of the career path that he's in.
Let's go with
Oh
that
wait,
answer.
sorry,
That's
Steve, you're a realtor as well.
That's way
Well,
that's
and I
way smarter than the answer he actually gave. But yeah,
I got qualified for this fixed before the last hike. So the 1 year fixed I'm taking is below the variable right now.
Yeah, so then
Like
I would take that
significantly, actually. Like it's a good rate. That's why I'm
Yeah.
taking the gamble for a year. It's under 5%. So I'm like, you know what? For a year, let's go with this and see what happens, and then we'll figure it out. And maybe I'm right, maybe I'm wrong, but at least I've never had a fixed payment. I've always had a variable. Every property I've ever owned up to this. So, I've had this year smack me in the face for the first time and learned a lesson and gone, you know what? Okay, for the next year, I at least like to know what exactly is happening, because this is also the most expensive property I've ever purchased, and I don't want to play a game with this one. Let's go for a year and see what happens. And actually, having Brandon Augmanson on, he was the economist for the BC Real Estate. Is it Real Estate Board, Steve, or Real Estate Association?
Real Estate Association.
He made me feel better about that decision. And I'd actually love your opinion on this, Nolan, because what he was saying was like, Bank of Canada, if inflation gets to 2% again, who knows when that will happen, what that's going to look like. I don't know. Let's say it gets there. He's like, well, if it gets there, they would rather have their overnight rate somewhere between 2 and 3, right? It's at 4.25. So if we do think inflation is starting to come down, who knows how long it will take to get to 2%. Eventually, the rates are going to have to come down here on the Bank of Canada side. We just don't know when. But eventually, you think it's going to happen, right?
Yeah, I mean, I'm cautious of saying I think it's going to happen or eventually it has to happen, because it doesn't. It definitely doesn't, and I think the Bank of Canada is very much agnostic to what the interest rate is. Like it'll be whatever it needs to be at to get it back to where they feel like the economy's stable. But what I do think is that there will come a time in the next 2 to 3 years where something happens in the economy, big or small, that has a negative impact on the economy, and it'll be a surprise and nobody will see it coming, and that will have some sort of negative impact on interest rates, and that's more what's likely to bring it down, not the fact that it has to come down at some point, but that at some point in the future there's going to be something that goes haywire in the economy, and that's going to have that downward pressure, right?
Yeah.
Back to the pandemic. Nobody expected the 2008 financial crisis. It's something like that that'll bring interest rates down.
I wonder if there's a law against this. I wonder how many people that work at the Bank of Canada took a 10-year 2% mortgage in 2021 or something, knowing what was coming. I wonder, do you think anyone that works at the Bank of Canada ever took a variable rate mortgage, or do you think they're all taking fixed?
I think a lot of the economists probably took variable rate mortgages.
Yeah?
Even in the face of those rising interest rates. Yeah.
Interesting.
Like they didn't have any data.
No, I know. I'm more joking with that, but
yeah.
Just,
I mean,
just
I had
curious.
one client that took a 10-year and I was like, wow, you're crazy. And then turns out they were right.
A 10-year at what rate?
2.2.
Yeah. Oh my God.
Yeah. I actually lost money on that deal because I did the math wrong. Whoops.
Steve, your renewal is coming up at some point here in the next. Is it next year? Is it this
June?
year?
It's June, so that makes me
6 months.
120 days out from end of June to start locking in rates and looking at stuff.
What are you gonna do?
Yeah,
I have a plan, but I think it has to do more with just reallocation of debt. So what I'm likely going to do is try and line it up on a 3-year to come in line for when my condo renews, which is currently 2 years into a 5. And then if everything makes sense at that time, have them both come up at the same time. And if there is anything left on my principal residence, ideally shift that to the condo.
So you're going to pay down
like a restructure.
This episode of the Tom Storey Show is brought to you by Karrasch Real Properties. That's right, my co-host Steve runs an amazing real estate team in the Fraser Valley. If you're someone looking to get more insight of what's going on in the Fraser Valley real estate market, I would highly recommend reaching out to Steve and his team. They're going to tell you what you actually need to hear, and they're going to exceed your expectations all the way throughout the transaction. I've met Steve and his entire team in person, and they're all people that are really, really passionate about what they do. And a lot of their business comes from repeat and referrals, so it's no surprise that they've continued to be in the top 1% of the Fraser Valley Real Estate Board for many, many years. They service Cloverdale, the Fraser Valley, and Surrey, and they know what they are doing. But don't just take my word for it. They have over 95-star Google reviews online. If you're looking for good advice that's not salesy with real people delivering really great results, I would highly recommend reaching out to Steve and his team. You can find them online at krproperties.ca, or in the show notes. You can go in there and you can book a call directly with Steve or someone on his team at a time that works best for you. If you're looking to buy, sell, or invest in the Fraser Valley, Cloverdale, or Surrey, I highly recommend Karrasch Real Properties. And now, back to the show. Are you doing a lump sum payment into your principal residence to get it down?
I would just pay it off
within
okay. 3 years. If there was a balance left, like say there's a small balance left, if I can shift that onto the condo side, I probably would. I guess I got to see if my accountant agrees with that's being legal and whatnot. But I think that's what I would probably look at doing, to just be hopefully mortgage free technically on my principal residence, which I think is likely a better option.
Now, as risk averse as you are, don't you think that you would rather have those not lining up on the renewal date so that you're maybe a little bit more diversified on your interest rate scenario and when those mortgages come up for renewal?
Mostly I'm hoping that if the plan goes according to plan, there won't be a mortgage here.
Yeah.
Gotcha. In my house.
Gotcha.
But I don't think so, because honestly,
if you're gonna have no mortgage, you're removing all your risk anyway. So
the amount of debt that I do have compared to most people is a lot less. So, mortgage debt, right? I mean, I have no other debt, so it's all mortgage debt. That's the biggest thing, and it's very small in comparison to the values of the properties. So if everything does go well, so let's say for instance I have $40,000 or $50,000 left over at the end of 3 years, if I can shift that on, and that's assuming that I can refinance the condo and that it hasn't come down back to less than what I paid for it, because I can't 100% finance it, right?
Yeah.
So if everything works out, that would be key. I do understand what you're saying though about you do have some risk there. For sure.
Yeah. Well, if you're planning on paying it out, your risk is actually pretty minimal. So if you're in a scenario where you're just gonna have two mortgages, I'd say you want to have those two mortgages as diversified as possible if it's a risk scenario. Now, one thing I did hear that I will point out is if your mortgage is coming up for renewal in June, you should actually be applying for your mortgage right now, like today. And the reason why is, well, you get a 120-day rate hold. If interest rates jump up in the next month, now I'm not saying they will, but if they do, and you've got a 120-day rate hold, you might be able to close on that property or on that refinance 60 days early and get a lower rate for today's rate than you would if you just wait until you're 120 days out. And then if rates go up in the next 60 days, you're kind of, if you wait, you're at the mercy of whatever rates go to. If you do it now, your worst case scenario is today's rate. And if interest rates go up, you just close it early. And if interest rates go down, then you close it at the right time and put in another application at 120 days out.
Does that matter if I stay with the same institution? Because it's likely to stay right where I am.
Well, you do it with a different institution, right? Because let's say your interest rate right now is 4.89 on the application that you put in today, and fixed rates go up to 5.5% in the next 2 months. Well, if you can get that 4.89 that you applied for today, at a different institution, then it makes sense for you to move your mortgage to that institution and just close 60 days earlier. Right.
Yeah, I think that makes a lot of sense. I don't think I'll do that though, because I have a product that
it makes too much sense for Steve to do it.
No, I have a Manulife One, and Manulife, I hope you're not listening, but I plan on keeping that. It has been the best tool that I've ever had financially to take advantage and pay a lot less interest. So at that right now, like that portion, the HELOC portion is a real kick in the pants compared to where it was. But its flexibility, given my style of income and when the income comes and all that stuff, it has provided me with paying way less interest than I ever would have on any other style of mortgage. I know there's similar products. I think RBC, I think
every bank has one.
Yeah, they just don't have the flexibility, and I think
they do. It's just Manulife markets it better than they do.
So, but they don't have most of them, except for maybe RBC, I think, don't have the no payment option. And I don't think, if I remember correctly in the clauses, I don't think a Manulife One has, they can't call it in the same manner that they can in the other institutions. And then, so if I wanted to do that, I would probably have to get a second that was a HELOC, because the HELOC for me, I know everybody, oh yeah, the HELOCs are the problem and everybody's racking up debt and yada yada. The HELOC for me has opened up so many opportunities, and it's even done things like, when I've had family members that have needed, that don't have the cash flow and they've needed it, I've been able to provide that for them. And just something as simple as that has made the people's around me's lives better and easier, because I've been able to help them, right? I'm not handing out loans, but my close family has relied on me for that in many situations. And just the flexibility of something like that, right? I just want to keep that type of product. I'm just not sure if there is as good a product on all levels with any other bank.
Let's not forget when Scotch goes on sale, you can buy 12 bottles instead of 6.
What do you always say, Nolan? Product, penalty, price, right? Product, penalty, price.
Product, penalty, price. No, if you're happy,
here's the real kick. I've looked at their rates, at least on their website, and man, their fixed rates are not friendly. Manulife is that one bank that goes, oh, I don't care if you're our current customer, screw you. We want new customers. And so they only offer good rates to new customers. So I'm going to have to go in and negotiate directly.
Yeah, I mean, I think every bank's like that. I don't think that's exclusive to Manulife. But that Manulife product, like I said, I've had a VP of Manulife sit down in our office and say, we are first and foremost a marketing company. And I think that's pretty telling. But they do have some things like the Scotia Step versus a Manulife One is essentially, if they're set up properly, exactly the same. The one advantage of the Manulife One is that you have that zero payment option. But really, in context, what that zero payment option is that is them automating a payment from your line of credit to pay down your mortgage, right? So the only difference with the Scotia product or the RBC product or the TD product or the CIBC product or the BMO product is that in the event that you don't want to make a payment, you would have to manually pay it from your line of credit to your mortgage. But outside of that, that advantage and a little bit of the education that comes along with it, if you're the right type of client for the Manulife One, I think it's worth the premium that you pay to have that product and to pay, because you will pay a little bit higher interest rate with them.
Does the Scotiabank Step? That is then a variable. So, for instance, I think I've got a step connected to my investment property, and the investment property is at 1.8%, right? For another 3 years. But the step portion of which is just readvanceable, basically, right? That's now at a variable rate.
The step is the product, right? And then the product has different products within it. So you can put a variable rate in it, or you can put a Theirs is actually a variable rate with an adjustable payment. They're the only of the big banks that does it that way. You can put a line of credit in it. You can put a fixed rate mortgage in it. You can put a car loan in it if you want, or a credit card if you want. I don't recommend that you do that, but it's actually set up so that you can have a whole bunch of different products underneath that step product. The step is the container. The products that you put in it are up to you.
Okay. So I just wonder, like, if I, for instance, have paid off a bunch on that particular property, if I re-advance in there, it's not like I just immediately get a 5-year fixed 1.89% or whatever. It's going to be probably a variable.
No, you could get you're not going to get it 1.8%, but you could put that portion of the mortgage into a fixed rate if you wanted to.
Yeah. So, but it's not just going to re-advance to the original amount that I had on the fixed portion.
If it's set up right, it can.
Or it could have maybe in the beginning.
Or it could have. Yeah.
Yeah.
Or you could just go back.
Scotiabank. Wow, we're really getting in the weeds.
Thank you for listening to our new segment called Steve's Choosing a Mortgage.
I think that's good though, because
no, it is good. That was great. That was actually I was listening to that being like, oh, interesting. Nolan, I think mortgage brokers can give us as realtors an idea of what activity is going to be like into this year. Now, me and Steve think it's going to be pretty quiet first 6 months from what we were used to, but people that need to buy and need to sell are going to do their thing, and there's going to be sales every single month. Now, there was an article, I forget which mortgage lender it was in the States, and they said that their applications were down 90%. So have you noticed a big drop in applications in Q4 of 2022 heading into this year that will lead into the purchasers this year?
Yeah, it's not 90% though. So, okay. So the thing about that number, and I think it was Rocket Mortgage that put that number out.
Okay.
The thing you have to understand about the U.S. mortgages, right, is they always say, marry the house, date the rate. That's an American thing, not a Canadian thing. You're starting to hear people say it in Canada right now because it's catchy and it rhymes. But what they're saying there is in the U.S., you can actually go and if rates go down, you can refinance like that and basically end up in a lower interest rate and not have a penalty. So they're constantly churning mortgages when rates are low. And they will if and when interest rates start to go down a little bit, they'll start churning them again. But the reason why their mortgage applications are down 90% is because one, they're down on the resale side, but they're also pretty much zero on the refinance and the
which counts as a mortgage application, even if you're not purchasing something new.
Exactly. So their numbers are really down 90%, but their resale numbers, their new mortgages applications for the purpose of purchasing a property are probably down 20 or 30%. And I think that number's pretty true. Like the reduction in the number of sales that you guys see on the MLS stats is probably pretty consistent with the reduction of the number of mortgage applications that we're seeing. It's maybe a little bit higher because there isn't as much refinance business, but you have to also remember that in Canada, mortgages come up for renewal every 5 years, and there's a certain, let's call it 15 to 20% of the population that is going to be doing something on their mortgage automatically every year because their mortgage comes up for renewal as well. So the numbers aren't as bad here. Okay. It's interesting. Like yesterday, between the time I left the house for dinner and got home, there was like 6 new mortgage applications in like pretty much a 2-hour period, which is common for kind of in between Christmas and New Year's as people start to think about moving. So that hasn't gone to zero, which I think is a positive sign for real estate in the future. Now, I think our BC numbers and our Toronto numbers are down more than the Alberta numbers are, but I don't think it's definitely not 90% bad. That's for sure.
Yeah, I figured like our market this year sales-wise was down 40% compared to the last year, which was insane, right? Like that 2021 year is going to be a record year for likely a long, long time in transactions and prices. So I figured maybe that was more the number, like closer to 35, 40% less applications. Now, the other thing that I was thinking too is like heading into 2023 now, maybe buyers just feel like they have a bit more certainty that rates aren't going to go up 7 times at least this year, that they can make a decision and feel okay that things are going to change every 2 months. Are you finding that in the conversations with people that you're talking to on the mortgage applications?
Yeah, definitely. I mean, there's less of a worry about that right now, especially with the media talking about recession so much. I think there's also a lot of people who are just ready to get into the market and buy at discounted prices, right? And there's deals to be had, at least relative to what they were in February of 2022. And I think, the interest rates being higher, but the ability to buy at a lower price, and then just life events are going to happen. And, are we ever going to see numbers? Well, are we going to see numbers in the near future that are like what they were in 2021 and 2022? No, because, and I think we talked about this like early last year, but I think the BC economists also mentioned it. We borrowed a lot of transactions from the future, and there's a certain amount of buyers that have been taken out of the market because of the fact that they purchased in 2021 and 2022. But there's still going to be a certain percentage that are, having a new baby, or, similar to the position you found yourself in, I'm guessing, Tom, is, and I'm going to kind of put this on you. I'm not sure if it's actually the case, but you found yourself with a new little one, and probably found yourself with not enough house, and that's why you made that decision to purchase. And that's going to happen pretty consistently. People are going to downsize. People are going to realize that their commute sucks. And that they don't want to, like in Calgary, I don't know what it is in Vancouver, what the Vancouver Toronto equivalent is, but they don't want to drive the frickin' Deerfoot Trail every day because they're afraid they might die. So they're probably going to move because of that, right? So that type of transaction is always going to happen.
Yeah, I mean, we wanted to get into a very specific school district, and what's kind of cool is that the house that I purchased, there was a comparable in February that was almost identical that sold for $400,000 more. And the house, and then the townhouse that I sold to move the money over to make this all happen, I think I sold it for about 130 less than it would have sold in peak, right? So I run those numbers and look like, okay, like, yeah, is my mortgage payment going to go up significantly for a period of time here? Yes, it is. Of course, it's a more expensive property, but I wanted to be here anyways. Would I have been any better to do this in February than now? Probably not. And it just made sense. And I actually wasn't even really thinking about it until the market started shifting downwards. And I was like, oh, you know what? Why not make the jump up now when the math makes sense? That was my rationale, where I actually saw it as an opportunity, where a lot of people are thinking this sucks. I guess it depends on what side of the coin you're on, whether you're moving up or haven't purchased yet. I guess it really depends, right?
Yeah, definitely. And I mean, in your position in an industry where your income's scalable, to have a smaller mortgage because you bought it when the prices are down 200 or 400 grand or whatever they were down, is in the long term way better than if you would have bought it at the top and paid a lower interest rate.
That's what I would agree with as well. So we got two more questions here for you, Nolan. The first one is just to congratulate you on what you've done with your channel this year, because me and Steve, obviously, even before we got to know you as a friend, were fans. So you're taken off. You've really taken it to another level here. Is there any advice you can give us or anyone listening that wants to grow a YouTube channel in 2023? Because you're doing it every single day. You're consistent.
Yeah, I mean, I think the key thing, and this is something that came up for me the other day when I was recording that book video. The key thing is to give without the expectation of return. That's really what I think what has driven that channel, is the fact that it's never been about becoming a YouTuber and making a whole bunch of money off of YouTube, because
it doesn't really happen.
No, I mean, it's starting, right? Like, we do make a significant money now, and it's a viable business now. But for 2 years, it for more than that, 4 or 5 years, it really wasn't. But it was about giving with no expectation of receiving, and just putting out the best information that we could. And then just constantly trying to get a little bit better all the time, just kind of up the game slightly here and there. And, if you do that, and you're willing to play the long game, I think it's possible to make a pretty significant amount of money and make a pretty amazing YouTube channel. I think what you guys have done with both of your channels and with the Tom Storey Show is evidence of that. If you're consistent, and you don't have to do it every day, but in fact, I'm finding that it's better not to do it every day. But if you're consistent and you're just, giving for the sake of giving, that's in my mind the secret to building a channel like I've built, and hopefully one that's going to be significantly better next time we have this conversation.
Hey, Steve, for the listener that's an hour into the podcast now, can we clarify once and for all on the record why this show is called the Tom Storey Show and not Tom and Steve or something else, and that it was your idea, not my idea. Can we please, Steve, can you please tell me why?
Actually, this is probably a pretty good time to maybe bring this up, because this whole show was Nolan's idea.
No, it wasn't.
It was. It was.
No.
It absolutely was. We were chatting ages ago, more than a year, probably a year ago, or just maybe within that. And it was like, hey, as a matter of fact, why don't we do something just like this? Like, I think you sent me a text like, hey, at the time, even though the name of it right now isn't great for a lot of people, but Millennial Money was very popular, and we thought it would be great. And then, as we kept talking, basically Nolan realized he's, couldn't necessarily commit the time for what Tom and I wanted to do as a result. And so then it was like, okay, well, this isn't going to work. That's obviously why we want to have you back so often, because we think it would be a great connection. It also worked really well because it would tie, so much of the country together, right, from the different perspectives. But then, so that
my recollection of it's a little bit different than that. I think I wanted to do like 5 times the amount of podcasts that you guys wanted to do, and you weren't willing to commit the time.
It's probably somewhere in the middle there. Yeah.
I mean, I wouldn't blame you for not wanting to be here with us every single week either, right? But
there's no place I'd rather be. Are you kidding? I'm gonna tell my wife I said that, but
so it morphed. And then if Tom, if you really want to get into this, we said this before on your channel, Tom, but it's funny that you mentioned books to read, because I've only ever read 3 books in my life.
Captain Underpants 1, 2, and 3.
Yeah. Yeah. I was going to reference an old comic book, but Tom wouldn't know what Arkham Asylum even was.
No, that's Batman, isn't it?
It is. It was a special
I
edition Batman graphic novel that came out when I was like 11. So one of them is Richest Man in Babylon, Think and Grow Rich. And then the last one is How to Win Friends and Influence People. Right. So
good one.
When it came time to Tom and I going like, okay, we really want to do this. What do we call it? Blah, blah, blah. And Tom was still like, I don't know. And this is the very short version of this. And you can go back on Tom's channel and find the much longer one. But he's like, what do we call it? And as soon as I said the Tom Storey Show, Tom was 100% in.
I'm in. I love seeing my names on signs, bus benches.
So Steve took advantage of the fact of, honestly, like, I want to get something done. What is the best way for me to get other people to commit to it? And in this manner, this is honestly what worked. And this is not the first time, right? I did 12 years of business as Chris Whitehead and Associates for a reason, because there was a name and there was a brand that got me to a spot where I knew I could be more successful. And honestly, if this is called Steve and Tom, nobody knows what that is. If it's called, Canadian real estate or whatever, that's very, you already gave away the Crest guys.
You gave them their name before we could even get it. Yeah.
But like, what else was it going to be? And, as people point out on my channel often, I'm a dick, and Tom is generally much more well-known and well-liked. So how could you not?
See,
and as a result, it all works out. And now I'm that other guy. It's Tom and that other guy.
Well, I always, thought that it was just going to be Steve was going to say something that was going to get us in trouble. And when we got in trouble, it was going to reference in the article line on the Tom Storey Show, even if I didn't say it, that I would be entangled in it. So Steve wanted to take me down with him is what I figured.
That's coming. It's coming. We just don't know when.
All right. Enough about the name. Nolan, we don't want to take up too much more of your time here. I know it's the holidays. So I just want to go over your book recommendations, and I want people to go and actually watch your full video on your channel of the book recommendations that basically made you a millionaire. So I'm going to just name the book, and I just want to give you give me a sentence on each one of like why, and then they can go to your channel to watch the full one. So start with Why by Simon Sinek.
That one changed my life.
Yep.
By the way, I just happen to have these sitting here, right? That one changed my life. This is the reason why I'm still in the mortgage business, because I just about got burnt out in 2013. I actually ran a real estate company. I was so burnt out on mortgages, which if you're in the industry, you know how insane that is. Giant adult daycare. 400 people. That was fun. But that one changed my life, because that gave me my North Star, which is to inspire people to thrive and give, which drives everything I do to this day. What's next?
The Go-Giver by Bob Berg.
Yeah, this one was given to me by a guy in real estate who is just phenomenal at what he does. And this is like the playbook for if you are in sales or you want to have a scalable income of some sort in some industry. This is the playbook for how to do it without feeling salesy. And it's all about just giving value, which is the whole reason that my channel exists. And I believe that your guys' channels exist as well.
The Only Investment Guide You'll Ever Need by Andrew Tobias.
Yeah, this one's cool. This one came from Mark Cuban. Just has this really great section on wine that and talks about how if you buy wine by the case and you save 10% on the case, you're tying up, let's call it $100 every quarter if you're drinking a bottle of wine every single week. But tying up that $100 is an after-tax return, and after all is said and done, it's like 177% return on your money. Versus guys are trying to put money into the S&P 500 and get 6 or 7% all the time. But basically, a penny saved is better than 2 pennies earned, which has driven a lot of our financial decisions and actually a lot of content on the channel. By the way, if this one is something that doesn't jive with people, there's another book. It's called what's it called? This one, The Index Card.
The Index Card, cool.
Yeah. So this
is
a really
that
cool
by?
book. This is by Helene Olin and Harold Pollack, and the subtitle is Why Personal Finance Doesn't Have to Become complicated, but the premise is everything you need to know about personal finance and investing fits on one index card, which is about the size of this book. And cool. This is a really great read if you just want a basic knowledge and basic education on personal finance.
Then we've got 2 by Robert Kiyosaki, Rich Dad, Poor Dad. Everyone knows that. And then the Cash Flow Quadrant, which I haven't read that one. Is that new, or did I just not know about that one?
No, it's not. It's not really new. Like, let's see, when was this published? But it's this one is what really. This one is 1998, so it's about 22 or 23 years old. But that's the one that really made me understand what it means to go from being self-employed to owning a business to having that financial freedom that allows you to do whatever you want to do. And I'm by no means, I'm still very much in the business owner stage, not so much in the investor stage, but it really lays out the system and the structure for getting to the point of, being able to wake up and do whatever you want to do in the morning, as opposed to having to go in and work.
Right. And then finally, The 7 Habits of Highly Effective People.
Yeah, this one I didn't realize until this one, Stephen Covey. I don't know where the center of the camera is.
Yeah, there
we go. That one, I didn't realize how big of an impact this one had on me. And I don't think I'd be where I am today if I hadn't read this one early in my career. Just because the foundation it laid for me without me even realizing it was a really solid one that allowed me to go into pretty much any business scenario and kind of know what to do from a 40 to 50-year-old adult perspective at like maybe 22 or 23 years old. By the way, there's another video that'll be coming out. It'll be like the 3 or the 5 courses that changed my life.
Oh, cool.
The other one was that
the YouTube for real estate video course.
Yeah, exactly. And there might be some competition coming in that niche, by the way. Sorry, guys.
Oh, we can't wait.
But the other one was there was a Tony Robbins like CD audio course. I can't remember what it's called, but it was like Unleash the Power Within or something like that, which is actually his live course name. But that course I had in my CD player every day going to university, and I just like cycle through the CDs, and that one had a major impact on me as well. He still sells it. I don't, like I said, I can't remember what it's called, but that had a massive impact. Speaking of books, you guys want the scoop on something?
Yeah,
nobody else knows yet.
Okay.
It should arrive here in the next couple days, but my newest book, Mortgage Secrets, is getting released on essentially January 1st. So about when this is coming out.
And where can people buy it?
Well, that's the great thing, is it's not going to be for sale. It is going to be completely for free. Somebody just has to pay shipping and handling for it. And anybody who wants it in Canada, we will we'll ship a copy out completely free of charge. And it's a mortgage book, so we made it short and to the point and super easy to read. It's not as complicated as this guy, which is The Mortgage Millionaire, which I published back in 2012. But it's just like the basics on how to get a mortgage without getting screwed. And if your listeners want it, they can go to mortgagesecrets.ca and they'll be able to go in and get it completely for free.
I love it. That's amazing. Well, thank you for letting us know about that. And everyone listening, I'd highly recommend going and grabbing that, because if Nolan writes something, I will read it. Also, just wanted to throw out there, I've never actually been, like, I have ADD. I've never been really good at sitting down and reading through a whole book. Like, it's really been difficult for me. But I became pretty friendly with Emma Pace this year. And I know, Nolan, you got to know Emma. Steve, you got to know Emma a little bit as well. We did a boot camp together for other realtors. And one of the things she said in one of the sessions was, when she reads, she'll buy the physical book, then she'll buy the audio book, and she'll put the audio book on 1.5 speed and look at the physical book, because it's reading to her faster than your brain can actually read. And I did that at the college the other day with this YouTube formula book. And I was like, oh my God, this is the best thing ever. So for anyone that struggles, that's my little hack for 2023. That's how I'm going to get through more books. Sure, you got to buy it twice, but if I finish the book, that's a win for me.
Did you know in the Kindle app on your phone,
yeah,
if you buy the book on Kindle and you have the Audible version of it, you can actually do that all in one place on your phone?
Oh, cool. I didn't know that.
Yeah.
Okay.
I'm the same way. I'll listen to books if they have good material in them. I'll buy it on the Kindle. And then if I really love it, I'll buy it in paperback, so it's sitting on my shelf if I ever want to go and look at it.
That's awesome. Well,
I've bought a lot of books 3 times.
Yeah. Nolan, this has been fun. Thank you so much for joining us again. Steve, final thoughts?
Do I ever have any final thoughts?
Sometimes
Keith,
you do.
Keith, I'm coming for you. The weight is starting to drop. I'm weighing in technically. I think I'm going to weigh in on the 2nd. Okay. And we're going to start this thing, and then we'll update people sporadically. But Keith, you don't stand a damn chance, and I'm going to get all your money.
I think you should have to weigh in now so that you can't go and do some bulking between now and the 2nd.
I've been doing bulking for
Just
the last
eating cheese curds all afternoon.
3 years, Nolan.
Yeah, me too. Oh, I kind of wanted it on that challenge until you said it might cost me $2,000 or $3,000.
And you're going to find out how competitive Steve really is. Well, I know. I think we're all very competitive, but Steve's been talking loud about it, so we'll see if this plays out. Thank you, everyone, for listening. Nolan, thank you so much for being here. If you guys haven't already, please go check out Nolan's channel. Just type in Nolan Matthias. Not just mortgage news and everything, but like life advice, financial advice. Go get the new book that he put out as well. It is free. That's amazing value. Have an amazing start to 2023, and we will see you all next Sunday. Bye.
Bye. Happy New Year. Links down below in the description. Like, subscribe, all that stuff.
All right, I let that be in. All right.